But now that we're talking about TikTok, I just wanted to bring up this topic. I know Caleb is gonna eat this up, but what are your guys' thoughts on these TikTok fudders talking about this recent Wells Fargo headline where basically the bank is shutting down like all existing personal lines of credit in the coming weeks? And I've seen a couple heads on TikTok that are just like portraying this just like black swan event, tying to that, saying like, oh, this is what we saw in '08, and like this just confirms the fact that like we're going to have this market crash of like 10-20%. And I know Caleb did a lot of research on this, if you wanted to just say what is actually happening right now.
Yeah, I'm gonna speak first to the second point you made about the TikTokers, man. If you're listening to any of these guys with full sincerity, if you're taking everything they say at face value, I apologize in advance because they're so wrong. And I just can't get over the fact that people consistently keep saying that you could time the market and then they just keep proven incorrect. The whole thing is that the market will keep going up, the market will keep going down, and you can't really predict that because you don't know the full factors leading to which where the money is going. You're not like Bill Ackman. You don't have all these connections. You're not Warren Buffett. You don't know all the hedge fund people. You're a guy on TikTok. You're like 40 years old and you're just talking out of your ass. Let's get that off the table first. All right, back on Wells Fargo. So Wells Fargo is interesting because obviously it was a scary headline, but if we look into the product, it was a personal credit line. It was incredibly niche. So the personal credit line, I'm going to delineate to what it means first. It was a credit line anywhere between $3,000 to $100,000 given by Wells Fargo that charges a variable interest rate compared to credit cards, but more than that of like home and auto loans. So it's a very, very niche product, not offered by like any other big bank. And as you can see, why it was so niche and why another bank was doing it is because it was dying. And from the last 4 years straight, there's been decreasing deposits. There's been decreasing net income coming from this. In the last year alone, get this. So it's in the commercial banking segment of the Wells Fargo. The banking segment has rebounded 16% since coronavirus. The personal credit line has gone down 20%. That's unreal. Okay. So I'm just gonna explain the logistics of their 10K because we reported earnings last week. So what's been going on with this credit line is that it has decreased in net deposits and decrease in net income, respectively minus 20 and minus 15% over the year on year. And at the same time, the segment has grown roughly 15%. So that differential is heinous. So it makes sense why they cut it. It was a niche product as is. As an example, if you want a $10,000 loan for like 36 months, you're paying 12% APY, which is less than a credit card, but a lot more than that for home and auto loans. So what they essentially are trying to do is redirect their customers towards a more profitable product. The problem being comes in the FICO credit score, not necessarily this like the warning bells that we're seeing. It's a FICO credit score because a lot of these people have had this line of credit for like decades, or like a long time, and that's 15% of your credit is based on the length of history. So them cutting off this credit line as a direct result affects the credit scores of individuals. And that's more of a bigger problem than like them cutting the credit line in the first place. So that was just a good business decision. But for me, Wells Fargo's been a dick for a while. Don't use their products. They've been messing over their customers for years. So it's no surprise they're doing it again.
So
I mean, they
what's
did get a
the
new management team. They got a new CEO, just so you know. I forget his name.
They're still doing the same shit. I mean, I
so
guess new CEO doesn't matter.
so why get these credit lines when they can get credit cards and get benefits from the credit cards and probably get roughly the same amount of money?
Well, credit line makes up for more than just like credit card history is really just like the history of your line of credit is worth I think like 15% of your entire credit worth. So it's important than just have like one line of credit. You need multiple lines of
Correct.
credit. I
Yeah,
wanted
you have all
I
the
wanted to
credit.
take what Caleb said and explain more of a human version, and maybe this is what I always do on my videos. I try to explain it just so anyone can understand. So why I think Wells Fargo is getting rid of this line of credit has a lot to do with COVID, obviously. When you are taking out a mortgage, it doesn't just matter on your line of credit. You could have a 850 or 750 and be fine, but you need proof of employment as well. You need proof that you've worked for the last 5 years, proof that you're going to work for the next 5 years. And in the past, when people had careers that lasted decades, that was easy. That was really easy to do. But when you have this 1 year stop in time where the world has to sit around and twiddle their thumbs, history doesn't have that same effect, right? I could have worked at a really nice paying job for 5 years that was working directly with customer service face to face that had to be shut down for a year. They went bankrupt. I lost my job. And now that past 5 years of where I was making, say, $100,000 a year, I'm not making that anymore. And I work at a fast food restaurant because I could not get the same job. And you can't use your employment history. Now, who it's really screwing is the successful people that have the consistent employment history that locked in your mortgage rate at an all-time low during COVID and is paying off a 30-year mortgage as the smartest people would. They're the ones that lost that locked-in rate, that had to restart, that don't have the same credit history, that are losing money as a result, because when you have a higher mortgage rate, you pay more interest, and so the people that were most qualified ended up taking the L, and maybe it may have helped people that weren't as qualified.
I mean, also on top of it is a massive amount of capital you can get for an essentially non-vetted loan. It's similar to a credit card where it's like you don't need to go to that bank, you don't need to get that pre-approval, and you can get up to $100,000. So it was great in that sense for those people. So it is cutting off another stream, you could say, leading towards that credit score and a lot of stream of income, which does suck for the people that were using it in the first place.
Yeah.
I mean, Josh, if you want to just say your take real quick, I know you're saying something while we had a technical issue.
Yeah, no, it's skeezy, but it's also a smart business decision. I'm just gonna say this. I'm not invested in Wells Fargo. I fucking hate Wells Fargo. And I think they're pieces of shit, regardless of this happening or not. Um, Now I'll move on to why I think a little bit of why I think they're doing it. I think there was a plethora of reasons. I think Caleb hit on it good. I think Russ hit on it good, but also you got to think they are a huge supplier of mortgages, and they can see everybody. So one of you said they can see, they saw the late payments kind of building up, or the non-payments on these building up. Well, guess what they're going to start doing on their mortgages? They haven't probably been paying their mortgages because they've been furloughed for 9 months, 12 months, whatever the case may be. And now they have customers that have these personal lines of credit for 30 grand, 10 grand that they haven't been paying that well on. And now they have a mortgage that they owe 30,000, 20,000 on in a lump sum by the end of the year. They're looking at it going, shit, this person's overextended. Let me cut off their line of credit that we gave them so they can hopefully pay their mortgage, because we don't want to have to foreclose on it. We don't have to want to pay the lawyer fees on it and try to sell it in the market for half of what it's worth or half of what they owe, all this other crap. So I think that's got a decent amount to do with it as well.
Yeah,
Definitely.
100%. But
But look,
yeah,
I'm going to say one more thing before this ends, John. So if we think about the purposeless credit line, you're using it for things such as like between $3,000 and $100,000. What are you buying with this? You're doing a down payment for a house, if you could find that nowadays. You're doing an auto loan. You're doing some kind of relatively small loan that doesn't require a massive amount of funding. Why would you be doing an APY, which is basically the interest rate for everyone who doesn't know what APY is? Why would you be doing APY of like 12% a year when you can get one right now? If interest rates literally at zero, why would you not be doing something for like 3, 4%, like even five for an FHA loan? You get 5% right now if you have like decent credit score. So why would you be using this credit line in the first place? The demand just increasing considering the current interest rate environment we're in.
Yeah, it's a personal line of credit that they're referring to is definitely not meant for mortgages, because you can't use a personal line of credit to buy a house. They won't. Most mortgage companies won't let you, because you need to prove where those funds came from, and they're not going to be like, "Oh, took a loan to get a loan." So that's usually not how that works. But I have a bad feeling that a lot of these personal lines of credits for Wells Fargo, they're noticing that there were boat purchases, new car purchases, things that are going to depreciate like crazy. And it was like, they're like, oh shit, we thought it was a good idea for all that time. And then all of a sudden, everybody's getting these stimulus checks to pay for them. And they got money coming in that they won't have next year. So it probably freaked them out. That's why they did it. Like, they cut the axe. It was like the guillotine that came down, because I don't think anybody saw that. They definitely didn't send any letters out to any of their customers. I'm actually one of their customers for school loans. And there was literally no letter that came out. It was just like overnight.
Classic Wells Fargo being dicks.
wow.
Nothing new.